below that Monday open, this gap is still positive for the week. So the market might still hang in there with a positive week, really just created from a Friday to Monday gap. And if we open up here, that's fine too. Did everyone close out that bonus trade that I took? I closed out that bonus trade, broke wing butterfly, for 30 cents yesterday. So we pulled in $1.35, closed it out for 30 cents, took a quick 105. That was a trade that lasted one day. Which I mean, in a way, it's like we probably are totally fine to keep that trade running until the 10th. But in case we are just going to see like upside risk, I'm not playing games with these markets. Like if I'm going to call the top and do it mechanically, then I want a very high probability of profit. So when the market was down yesterday, offering over $1 profit on that trade, that's 78% of the credit that we pulled in. I'm taking the profit in one day, and now I don't have to worry about it. If I like the trade again, maybe I'll do it again. Depending on this gap higher today, maybe I'll go higher. But when I took the trade, we were already up here. We were at these highs, and I was going up to that 70-40, 70-50 zone. Okay. All right. Let me bring up a couple more workspaces. Okay. Let me open these up. So that one is up. Our VIX is at 16 still. Get some gamma levels in here. Okay, so we're opening up with a gap. Pretty good call, Waller on 69. Respect the highs. Let me open up there it is. This one here. So for the day, we settled in around the 100% ATR. Take a screenshot of this. Uh, 68.22. All right, so close FOMC day. I didn't trade as I put FOMC day. FOMC day. Didn't trade to avoid sitting on high vol and no. Okay, so didn't force a trade on the 29th. Price closed within the ATRs. Closing price 68.91. So we had an aggressive gap lower. Almost there. Okay, so let me recenter this. Price at 68.21 and VIX at 16.22. So about a 1.2% move. uh, we shouldn't see prices going up above around 68.90 to 68.95. We shouldn't see prices going above that. Again, to be conservative, we've seen this happen before. It's rare, but it does happen. If we gap higher, like let's say we're gapping up about 0.7%. If we're gapping higher, here is a 0.7% gap. Okay. If the market uses this in intraday, we have the plus minus also end of the month. We got a 45, 46 point move today. We have core PCE. Maybe that pulled the market back a little bit. Let me check what Bloomberg released. What? There we go. We should have USPC this morning. Do we not? Nope. I guess we had CPI. We should be thanking our lucky stars that we had some news last week. So no USPCE. What the heck? Was it yesterday? Did I miss it? Did we just not have it? All right. Yeah, there's no news. I mean, we had CPI news last week, so I thought we would at least have, if we had CPI, we'll have PCE. Non-farm is slotted for next week, but there's still no, I don't know. There's just a lot going on under the surface. But yeah, so I guess no news today. Um, we'll see. All right, so that's not disrupting much. So anyway, I was going to say this: if we're opening up around zero point 0.7 higher, I still, based on the close yesterday, we shouldn't see prices going up higher than 68.90 most of the time. Okay, but I'm going to err on the side of caution because we still have Mag 7 flows this week. It is end of the month. There can be some wonky stuff going on. So what I'm going to do is take my 1%. Okay, if we open here, I'm going to take my 1% and go higher and set this in as my bear call spreads on the day. So that might be a set it and forget it. I can also look at like a 10 to 15 delta for a daily profit play. It is Friday, certainly not my favorite day to trade. End of the month with all this week's volatility. We didn't have PCE, but we did have Mag 7, we did have FOMC. So reverse iron condor is a maybe. But like I tried to price it in yesterday, it would have actually worked out, pretty nicely to get some late day direction. The issue is it was only trading for like 560 or 570. And I won at least like $6 on that trade. So that's why I didn't take the trade. So anyway, I will probably set some bear call spreads at levels I think are pretty safe and stay out of the way. And if we're gapping higher, we're going to be right back into positive gamma. If we gap higher and this goes green, if we're above 68.45, there is your complacent zombie market to the upside. We could gap up and go nowhere. We can gap up and gap fill. I don't know what price is going to do. But as far as what I'm reading in the options market, 6,900 seems to be gap open and gettable price target for the day. Right? So if we open, let's do this. If we open about 0.7 higher, 70 to 6,900 is a 30. We're expecting like a plus 45 on the day. So keep that in mind. Could we go higher than 69? Sure, we can go to 69.10, 69.15. So I'll play conservative, but I'll get the levels in and I'll probably put that 10 wide $2 spread because I'm confident that if we get filled, those should be pretty good trades. Can you review quickly the 3 December 31st? I don't have that trade, David. Are you talking about a waterfall strategy? Okay, that's not an iron condor. That's a waterfall. That's the put condor that we do for strategy 2. So I'm not market neutral on that one. What's your line in the sand? You know what the price is? If you look at December 31st, here's waterfall. December 31st, SPX. Let's go here. 1231. So this trade we just took for 50 cents, I need price to stay above 61.35 by the end of the year. Okay, we have some more. This one needs to stay above 59.30. This one needs to stay above 5,700. This one needs to stay above 56.50. This one needs to stay above 55.75. Obviously, these are a super, super high probability of profit that by the end of the year, we're going to be above 5,500 or above 5,600. The one that I did last week was I went down below the 200-day moving average. So I went a little bit tighter to price. I still offered us up a trap, and we have less risk on the trade. So my max risk here is 850, pulling in $50 credit plus having a profit trap if we're going to come back and retest maybe those previous all-time highs around 61.45. The market would have to have a pretty rough November, December. And I think right now, the optimism is still just baked in. Like, this market doesn't care that we have a softer labor market. This market doesn't care that we're in a 30+ day shutdown. It doesn't. It will eventually, but probably not right now. And I just think that you have to appreciate the path of least resistance is up. And you have to appreciate there's probably more upside risk to this market with everyone talking about a bubble, everyone talking about how terrible the economy is. The most contrarian thing the market can do is just keep going higher, because the market will push to maximum pain points. And right now, every bear that's making all this noise out there in social media and all these newsletters trying to scare you into not investing are just going to watch prices go higher. Eventually, things will turn. Eventually, we'll have a correction. But the whole market is financialized. I mean, we have Trump is a perfect example of like everything he says that moves the market completely pivots to something that's going to be taken as positive. Say something to drop the market, reverse it to put a bottom in. Spike the VIX up, tame the VIX and squash it back down. That's been the entire year. So I don't see that narrative changing. You talk hard against China. What are you doing this week? Hey guys, buy our soybeans so we can get some rare earth minerals, where we can start getting some global exports, whatever, as we're partnering with all these other countries too. So here's what I said yesterday on my YouTube session in the afternoon. As long as there is a ridiculous amount of money being spent on this AI race, I know it seems silly, okay? But it's not being fueled by debt. It's being fueled by cash flow and sales. Google is a multi-stream revenue, trillion-plus-dollar company. So is Meta. So is Amazon. So is Microsoft. So is NVIDIA. Okay. If they are willing to spend percentage of sales versus taking on debt, we can keep this party going for a while. Okay. And also it's broader than tech. I said this literally yesterday. It's broader than tech. That spend is going into physical building, data center buildouts, computing power, commodities like the energy, the rare earth mineral stuff for computer power. We need that stuff. So it is like we can't meet demand right now. And until we bottleneck it with our energy inefficiencies, or it shows they're spending way too much money and not returning to investors, then the market will care. Right now, they don't. Okay. All right. It's opening bell. Let's get some levels. So we should be gapping higher. MDT just filled for a debit. DXCM just filled for a debit. These are either newsbreakers. I think these are newsbreakers. Let me check these here. That was DXCM, MDT, DXCM. Newsbreakers filled. Okay. So newsbreakers, I'm putting this in. Newsbreakers. Just had a waterfall trade close for profit for 5-cent debit. It's nice. Trade management, DXCM. Trade 98. Entry 1.25 filled. Setting take profit at 3 dot. Let's go 125 times 5, 62 cents. Go $1.87. So setting take profit at $1.87. Okay, and then MDT. MDT looks like it's pinch point trade. Okay, MDT filled 90 by 92.50. Okay, newsbreakers, and then in pinch point. Trade number 60. MDT filled for debit spread. $1.25 debit. Setting $1.87 credit for 50% return on risk. All right, so that was DXCM for newsbreakers. Let's put news here. $1.87 credit. And what was the other one? MDT. MDT. Pinch. 187. Okay. In and set. Now we'll go SPX. We had a gap today. See what's up. Price is gapped up and falling. That's fine. I'm going to be conservative and kind of respect the play. It is Friday. It is end of month. We had a lot of volatility this week. Just in case of some shenanigans, a reverse iron condor would be pretty solid. Plus or minus on the day now is about 30 points. That's still pretty decent. Maybe end of the day, a reverse iron condor would not be a bad play. If I went 50, 55, 70, 65, again, only getting like 570, 580, 585. If this was offering $6, I'd be more likely to take it, but it's only offering 570. I'm not going to take the trade. So I'm going to go conservative. I'm going to measure my move from the open here. So go open, low, VIX around 16.4, 16.45. So about a 1.02, 1.03. So 69.30. 69.30. Let me see what that looks like. So 69.30. If I went 30, I'll go 35 and 45 for $2. And 40 and 50 for $2. And that's fading the high side in case we have a push up to those highs again. Now let me take a look at the current positions. 10 delta. I mean, if price is going to be choppy for the day, that could work out for a Friday. I don't mind it. I'm going to go 10, 15 and 95.90. See if this fills for $1. Okay, pending orders coming into daily profit play. All right, daily profit play coming in hot. Happy Halloween, everybody, by the way. I was going to wear a costume this morning, but I'll I'll save that for tonight. I know we have a company-wide costume party, which are already looking pretty good. Mine are not that cool. We're doing a family costume with Little Sesame Street, so I'm not I'm not doing the cool stuff like we got somebody that's ACDC, we got a witch doctor. Yeah, we got some pretty serious costumes. All right, here we go. 1031 expiration, 6910, 6915, 6795, 6790. Okay, it's trade one. Then 31 expiration, 6935, 6945, and 6940, 6950. Okay. All right, it's in Telegram. So let's see if those fill. Give price some wiggle room. I'm not going super tight to price. I'm doing a little bit lower delta and I'll put the credit that I want. So gives us some wiggle room here. You know, if we're going to go up to 6,900, let me bring in my real-time gamma, see if we got some outstanding levels. Okay, so shaded zone here. Let me actually highlight this. So edit, change this to, I think I'm going gold on this. That doesn't look any better. There. Okay. So positive gamma, we are above it. So this is the 6850, 6845 gamma pivot. If we can hold this area, rally, then 6,900 seems doable. If we're going to fall, I mean, I would look for some intraday support in here. If we fall down, this is the important spot to see where price bounces. If it bounces here, that's the market hanging in there with positive gamma. If it flips to negative, we can come after that low again. Okay, that low is 68.21. So if we have a decent directional push this morning, I'm going pretty far out of the money for my pending order on daily profit play. So if we get filled at $1, we're giving ourselves some pretty good wiggle room for the day. Okay. So if we're looking at the VIX I mean, the VIX is slightly going up. I mean, you're going to want to give yourself about a 1.05. If we start here, so this would be my VIX box on the daily profit indicator. We shouldn't go lower than 67.50. We shouldn't. Okay, especially with a gap higher. You could say, okay, let's take the 1.03 VIX measurement, go from the top of this box. I mean, this puts us to like 6,800. I mean, we shouldn't see prices going lower than 6,800. Okay, shouldn't. But that's where the VIX box was based on yesterday's close. So to be, again, a bit more conservative, if I'm going to like call the top, call the bottom, I want several reasons to say, I don't think price can go that low. I don't think price can go that high. Obviously, we know that price can always have the chance to go much higher, much lower than we think. But most of the time, it won't. And that's what I'm calculating. So we shouldn't see prices going too much lower than around 6,800 today on the downside, but potentially down to about 6,750 if things get a little nastier. And this is the original VIX box based on the previous day's close. So if I was putting in put spreads today just to see if I can call a bottom, that's where I put it. And it would still be with tight risk. Okay. So I will put in, I'm curious, just like you are, like, do we actually see, 6750 get tested today? I'm going to throw in a little fancy trade here. 6750 or 6850, 6750, 6750. Okay. I'm going to throw in a broken wing butterfly that will offer nothing for credit right now. It's offering 10 cents. I'm not excited about 10 cents. But for this risk, with a profit trap of $5, I'm risking 4.95, but I'm going to put in at least, I'm going to go a dollar credit. If I can get a dollar credit, I know that's a lot to ask for. It's probably not going to get filled. But if I get filled for a dollar, that makes my risk $4. And the likelihood of a dollar is high. The profit trap potential is also quite high. If we're going to like close near the end of the day at these levels. So that's a pending order. Okay, so let's see what we have. Uh, my daily profit play is trading around 85 to 90 cents. If we get a directional push, we might see this thing fill. That's fine, just like it did yesterday. We were trading around 85 cents. It got filled for a dollar, and then we made profit. Okay, so let's see if price gets a bit more directional to the downside, we might get filled for a dollar, and then we're going a reasonable amount out of the money. All right. Any questions? We good? Let's see if this little put direction gets us a fill. So pretty sharp sell off this morning. That's good. We still have this support level. I mean, watch this closely if you're watching price action. 68.45. If we hold and bounce, then the market's trying to maintain that positive gamma stance. Okay. So it wouldn't surprise me. End of the month can be pretty volatile, some surprising directions, some shenanigans. So that's why I'm being a bit more conservative today on my levels. We bounced at 68.45. Do we have enough to get from 45 to 90? Maybe. That's a 56-point move. I mean, who knows? Are we just going to dump straight down for the day? I don't know. Probably not. I would imagine we'll take a look at the heat map here for a moment, but Apple is, was up to all-time highs. It's pulling back. Amazon, fantastic earnings. It was over 10%, I think, from the close. So that is up almost 12%. That's a huge rip on Amazon. I should be seeing mostly profit on my Project Options Edge. So we had some Amazon trades in, Amazon here. Ratio spreads now offering 89% of max credit. Probability profit is now 99% that I stay above 160 by the end of, well, I guess the expiration for January. This is January 16th. A little bit of time goes a long ways. So, I mean, I could take the profit now and sacrifice about $17, which honestly is probably fine. I would get a decent amount of buying power back if I close these out. Let me see if I can. I'm actually going to sit on these over the weekend. If I sit on these over the weekend, these might offer up over 90%. And if we're up to like 140 or so, 140 profit out of 153, I'll take it. So if you're in my Project Options Edge, we've got some ratio spreads to manage on Amazon. Not bad. Okay, I'm actually going to check on another account here. Okay. All right, we're good. One more account. Nice. Got some fresh highs there. Very good. Okay, what else? So Amazon is up. Let's go through the broad or the Mag 7. Apple, fresh all-time highs, fading a little bit. Amazon, great earnings, turning a bit red, but huge gap to the upside probably led to a lot of the pump up this morning with Amazon getting into the $2.65 trillion. Broadcom at highs, stalling a little bit. Google, great pop on earnings. Probably another one that hits highs and fades. I think similar to what we saw price action on Microsoft, where we exhausted on that gap higher, faded about 13%. I could see Google pulling back to a moving average here, finding some support. Meta not going higher. We have a pending order that we took yesterday. It's a 610 by 615. So we'll see if that fills. If Meta comes down here, I think that's a pretty good bull call spread to have. Microsoft again failed at the highs, falling again. Looks like we could have some range trading here. Highs are on 555, recent lows are on 492. Not a bad spot to look at some support. Also finding some dynamic support with the moving averages. Netflix starting to turn up. I don't think we're going to get filled on our swing trade we wanted. We put this in for, I want to say newsbreakers, a pending order around the 1075 zone. Just didn't come low enough for us to get us filled. NVIDIA, couple days at all-time highs, a pretty big surge. Really an impressive surge for a company that just crossed $5 trillion. We went up 20%. Whew, 20%. So crazy stuff. We are now over 5 trillion on NVIDIA. Scary stuff. Concentration, it's like 16% of GDP right now. Tesla is still pretty choppy, but I still like Tesla the upside. Any dips into like the 360 zone, love me some Tesla. I've got a lot of ratio spreads in the money covered calls back in the 200s. Berkshire, market's kind of treating it like crap because Warren Buffett's pending retirement. I love Warren Buffett. I just can't believe the guy's 90 something years old and still doing this. And, I would hope they don't punish the company upon his retirement or upon his passing. I'm sure the philosophy over 60, 70, 80 years could be passed on to people, but they're like, nope, the Oracle of Omaha is removed. So this company, I don't think that's the case, but anyway, probably noise. And if anything, if anybody's sitting on cash to scoop up whatever, negative stuff comes our way in the next maybe few years, I'm sure Berkshire Hathaway is sitting on some pretty good positions where, their dividends, their cash, yeah, they'll be fine. I'm pretty sure they'll be fine. All right, some other stuff going on. Bonds retreating a little bit. 10-year yields up slightly. Remember the Fed just cut 50 basis points, right? They cut in here. Okay. Literally the day the Fed cut, we're at 4.03 10-year. We're actually higher. This is another thing that's not really great. The Fed just cut 50 basis points and the 10-year yields are nowhere. They haven't gone up, but they haven't gone down. Okay. Edward says, I'm not doing a morning butterfly this morning. It'd be a, oh, you're talking about the broken wing? Yeah, put in for $1. I put in for $1. I doubt it's going to get filled. I went all the way down here to 67.50. So I did a 55 by 50 by 40. So it's like the asymmetrical or the skip strike is another way to think about it. So if I were to buy the 55 put, sell the 50 put with 2 contracts, buy the 40, I'm putting in $1 credit. So I want price to fall. If that's going to be filled, I want it to fill. Fill me for $1. That's the high probability profit. Also offer a profit trap sitting here at these VIX lows. Also the 100% ATR. So if that does fill, that offers me a pretty good chance to make $100 and also have a profit trap at the end of the day in case we're going to sit here and fill at the lows. If price does absolutely nothing today and it's just totally choppy, then I kind of ride it out and wait it out. Okay. All right. Okay. So P&L's up. I want to check some expirations really quickly on my end. Somebody asked me, how do you do track all these trades? The broker platform makes it pretty easy. Obviously I've taken all the trades. There's a memory to them. I know there's a lot of tickers that I have here, but for the most part, my routine throughout the week is, when I'm coming into expirations, I do something with them. So this week I Rolled Tesla calls. I'll give you the numbers here. Tesla, I rolled some calls, kept the strike the same for $2.93. So that's added to my bottom line, which is good. I did another one where I rolled NVIDIA for 208, added that to my bottom line, and also rolled up my Qs by $3 and 215, so 515. So increase my profit out to December by about $1,000 in Tesla, in NVIDIA, and Qs. So that's not bad. And that was because I had some expirations that expired on 1031. So I rolled them out. I'm given the market seasonality, its grace and history and probability that we just stay non-disrupted. I think that the market might go sideways. I think that, traders aren't necessarily prepared for sideways. Traders are going to be bored by sideways, but sideways is great. Sideways is a trader's market. So what do you do in sideways? Waterfall strategy 2. You sell covered calls. You raise some cash, right? Because my warning right now is like, if this is going to go sideways, and broadening patterns are pretty good for sideways, this might still be valid. If we fall into this area, here, but still find some support, this is a good looking kind of broadening pattern. Okay. It can be very tricky because everyone's looking for direction. Everyone's saying this is the top and no, it's got to rally and this is support. Maybe it goes nowhere because the market's been super directional. So nowhere is actually a very real possibility. Anyway, there's good trading in there. There's good trading in there. And what I'm concerned with is if this becomes, and I mentioned this yesterday in my YouTube session, if this does show sideways like behavior, okay, I'm trying to make sure, like, I'll watch price action. We'll watch these levels. If all of these moving averages start to compress, okay, this market better hold that support and continue to nudge higher, because if it doesn't and it rolls through these moving averages, then all of a sudden we have that quick turnaround into a bear market. Everything is technically showing bearish. And now you're looking to see where's support. Is it a 10% correction? Is it a 20% correction? Is it a 30% correction? I don't know. But if this is distribution, there's going to be a lot of bag holders here and a lot of long call option chasers that are going to get crushed, right? So let me do one more thing here with sentiment, and then I'm going to start wrapping things up on my end. Okay, like I said, I've got to stop here at the top. I do want to do a very quick stream for you this morning. Daily profit play. Again, we do this stuff every single day. And then my workshop this afternoon at 2 p.m. for practical options. I will post the Zoom link in Telegram. I'll also be running this on my YouTube channel, which is youtube.com/Chris Pulver. Okay, here is AAII sentiment. Take a look. We had a pretty big surge in bulls. Bulls jumped up by almost 7%, actually over 7%. So a 7% increase on the bullish side. Neutral camp is not a huge difference. It's 1.4%. But the bulls, you can see here, the bulls taking a bigger chunk of the pie, and then a big drop in bearish sentiment. Okay. Now, the contrarian in me is looking at this as, okay, historical averages of bears around 31%. We're at 36.9. So still pretty elevated. But this right here, this is where I think the pain trade is the upside. If this falls back more into like, okay, the bears have now retreated to like 32%. Okay. If the bulls climb to like 46%, climb up to 50%, guess what? There's your 1-year bullish high. That is November of 2024. We rolled over 8% in December. Between November and December, we had like a 6 to 8% correction in 2024. And obviously we rolled into a much bigger correction coming into 2025. But there could be some heavy volatility if this market gets, too bullish and too complacent. So there's that. And then there's also the NAAIM. This is the investor survey, active investment managers, reading at 100. Okay, here is a short-term warning. This usually creates some type of pullback in the market. Usually, every time we've hit 100, with the exception of, I don't know, this is July 2nd. We had a pullback on July 31st and August 1st. Okay, this was August 20th. It took until September to get a little bit of a pullback, that first part of September. Back up to 100.83. I don't know. I'm kind of want to looking at the, let me see. I kind of want to look at a broken wing butterfly again. Let me see how high up I can go for Monday. I'm just curious if I get something very, very short term. Probably not, though. Can I go up to 7,000 here? No. I'd have to go out to next week. Friday's the 7th, I believe, right? Next week, the 7th. If I go to Thursday, the 6th, I'm just thinking it's like, how far up can I go? These are really, really low. All right. It's not as far as I wanted to go. Let me go back to the 10th. I don't mind this trade. Let me see if I can get up into the 70 50s again. All right. I'm going to take this trade. Similar to what we did before, I'm going to go 5 delta. That's a very low probability of getting tested. 50, 60, and 75. This actually could be perfect. Okay. I'm going to put in a very tight risk broken wing butterfly. Offers $1,000 profit trap. It's not trading for a credit that I want to take right now. I'm going to put a pending order in. But if this trade can fill for $1, okay, $1 gives me a $4 max risk. I'll put this in the chat. This can be a bonus trade if anybody wants it. I'm going to put in a max loss of 400, a likely profit if I'm filled at $1, a likely profit of $1, and potentially $1,000 profit trap. Okay. So I will put this as a pending order. It may not get filled, and that's totally fine, but I'm also going to tighten up the risk. Okay. If this shows 50 cents, I might still be willing to take the trade, but then I'm risking 450, which is okay considering I've got $1,000 profit trap. But we're going 5 delta, which is way out of the money for Monday the 10th. So if we have more of a melt up, that should take into consideration. I have no idea, man. Like the market next week is like, does government come back online? We've been literally in a shutdown for 30 days. We're going into like the longest shutdown in history. I know that the Kobayashi letter, that if anybody saw that this week, I shared it. That went viral on Twitter, on X, and that shows like all these major employers that are cutting jobs. Some staggering numbers. We've seen like over 900 million jobs between revisions and current cuts. Like we're like halfway there to what we cut back in COVID. Like the labor market is not good. But that's Main Street versus Wall Street. That's the weird part. If you think that Wall Street is the economy, it's not. What does Wall Street actually celebrate sometimes? Job cuts because it's better for profit margins. Wall Street celebrates total greed. So you've got to separate like signal and noise. I know that we've got labor cuts. I know we've got Main Street struggles. I know that it's not looking great out there under the hood. But Wall Street right now is like blinders on. Everything's great. AI, baby, and it's kind of crazy. But you got to separate that signal from noise. Okay, all right. I'm gonna put this trade in for $1. Pending order. So I'll put this in the Zoom chat. So bonus trade, SPX 1110 expiration. I'm buying the 7040. Actually, I'm going 7050. Yeah, 7050. So buying the 7050 call, selling the 7060 call with 2 contracts, and then buying the 7075 call, $1 credit. And I'm doing pending GTC. So good till canceled. That trade gets filled. Excellent. If it doesn't, no big deal. Okay. CLX, Fiserv, and Meta. Those are all very different companies there, Beverly. Fiserv, I would stay out of it. I mean, that had a pretty big drop. There might be, there might be a little cigar butt trading here where it's like, oh, we overshot on Fiserv. But look, my biggest concern right now is why would we have companies that are down 70%? And you're looking at that like, that's a good opportunity. Something's going on here. Markets don't like it. If you can see anything that's clear in 2025, if the market likes a stock, it's taken it to super crazy high levels. Look at Palantir, look at Nvidia, look at all your quantum computing, look at your nuclears, look at the market loves and celebrates things that are really ripping. Something like this, it has some issues and the market is punishing it. I don't want to be sitting here guessing when everything says this thing's bearish. Like, granted, we're back to COVID lows, but we just broke them. So I don't know. And if we go to the charts here, let's go Fiserv. I mean, fundamentally, it's okay. Still way below estimate. I mean, according to this, it seems worthwhile, but like what is happening is Fiserv like HR provides payments and financial services technology. It's like I don't know what their issue is, but the stock just got crushed. It's down 70% from the recent highs. It's now a 10 price to earnings, way undervalued. But do you want to be guessing? I mean, I looked at a ratio spread on this thing yesterday to stay out of the way, and it was only offering like 50 cents credit. So I'm not going to take the trade. The IV is crazy high, but I also don't want to be owning the shares. Like this thing might just continue to drop. So I don't know. I'm not calling the bottom, I guess, is what I'm saying there. CLX, Clorox, I mean, that's consumer defensives, very different, right? I mean, like I said, you've got very, very different stocks there. Fiserv, tech-based solutions, probably getting beat up from layoffs, maybe. I don't know. Clorox, super defensive. This would be like trading 3M or Kellogg's. This would be trading Procter and Gamble. Maybe it's a dividend play, 4.4% dividend. It's at some good prices. 2023, 2022. I mean, we're back to 2018 lows. I mean, COVID lows were in this noisy zone. We're back to 2018 lows. Let's check. I mean, if you like the dividend side of it, Snowflake's pretty good. Household consumers. What we haven't seen is we haven't seen sectors go defensive yet. Not yet. So I think this will be a good trade when consumers get more defensive. These are buying household essentials essentially. Okay, we are at 17 times earnings, fair value at 213. It's like, I mean, in the value world, this is a good trade. But what is the reason this is pulling back? I don't know. I mean, maybe it's just the pullback in consumerism, right? This is affecting the if household essentials are a little tight on budget right now, it's just being hurt. There's just there's clearly a shift in the consumerism from the the lower demographics or the lower socioeconomic client or customer. But on the value side, I mean, I could see this being in a range, right? We have price action between about let's say 115 level, which is obviously a little bit, we're making some lower lows here. So slightly lower lows, slightly lower highs. Like that's a channel. I do see oversold conditions on the weekly. It's not a bad trade. Let me pull this to black. So maybe this does offer a short-term bounce. Okay. What I would look for is if that bounce is great, it stabilizes. What I look for is, can I go out mechanically speaking, check out it depends on the premiums here. If I go CLX, we got a 53 times IV rank, which is actually quite high. If I went out 77 days to January, okay, we've already had a pretty big beat up stock. Let me go down to the put side. This is the good and the bad. I'd love to do a ratio spread on this thing and pull in some credit, but you can see that the premiums drop off like a rock. So unless I'm trading this thing at an expected move, if I went to 105 by 100, even that trade, it's like, okay, you're telling me I'm going to take a naked put on a ratio spread that's going to pay me 44 cents. No, thank you. So an IV rank this high, a $5 profit trap. I mean, if this was like $1.50 or $2, I'd take the trade. But it's 44 cents, and that's the problem with some of these. It's just a low premium stock. So for me, that likes to generate income from option trading, this just doesn't set up for a good trade for me. But if you want to own shares and collect a 4+% dividend, I would think at some point it's going to stabilize. If it goes from current prices back up to 120, 130, 140 ranges, if we hit this recent high, recent low, I mean, there's a range trade in there. If you're looking for that type of price appreciation for maybe 30, 40 bucks. That's about as best as I can do on that. Meta, I think Meta is still, it's a forever company. It's just going to be volatile. Here's the weekly chart. If Meta is down, I mean, the weekly chart, you can see here, we pulled back below these numbers. There's some pretty strong support around like this 600 zone, 600 to 550. Fair market value on Meta is in the thousands, I believe. Snowflake is pretty good, way below estimated value. Price to earnings, it's not crazy expensive. I mean, it's a Mag 7, so it's up there in the high 20s, but fair value over $1,000. So it's on sale. Meta's on sale. It's a cash cow. It has other revenue streams. Is it spending a lot of money on AI? Yes, but that's what Zuckerberg does. He went all in on the metaverse. Everyone hated it. They crushed Meta when they did that, but it turned out okay. Right. So this, I mean, the same thing here. It's like, okay, they might get beat up a little bit, but I still think it's a forever stock. I think this thing gets to $1,000 eventually. It might be volatile. Keep in mind that 2022, the thing was down like 70%. Nobody enjoyed that. Down 77%. This is a beautiful thing about highs or the big discounts. 77% discount, and it's up 800% literally 3 years later. Can you imagine that? If you like Meta that much, you're like, I'm just going to invest everything in Meta. 8 times your money. So crazy stuff. If you don't want that type of volatility, then don't pick individual stocks. But I think Meta is proven itself to be a cash cow. It's in the Mag 7 for a reason. Okay. See here. COO resigned after 27 years. Okay. I mean, it's time to retire. That's a long time. Government employees come back now. I mean, I think there's a lot of uncertainty of what people are going to be doing for jobs. My concern with these layoffs, I think I've got it right here. I've got to go here in just a few minutes. My concern with these layoffs, where the heck did they go? There. Okay. This went viral this week. Recent layoff announcements. Amazon, Walmart. I mean, Walmart's in here somewhere. There's like 13,000 jobs or 14,000 jobs. Accenture is one of the largest employers in the world, cutting 11,000 people. Intel. I mean, UPS. Look, UPS stock popped up because they cut 48,000 employees. Like, that shouldn't be something that we're celebrating. And I think it's insane that you look at these numbers, you add them up, and you're like, this is good, right? I mean, it's good for bottom line. It's good for corporate. That's what's so crazy. It's like Wall Street is so greedy. But this is the twisted part about the market. If UPS can make better margins, it rewards the stock. If Amazon could cut up to 30,000 people and go full automation and have like dark factories and dark distribution centers where there's no single human working there, their profit margins will be through the roof. That's what Tesla's going to do. Like, it's not going to surprise me. So we are in a very weird time where there's going to be like a Main Street recession and a Wall Street possibly freaking boom still happening. Right. So it's big stuff. It really is. I don't know how it ends, but I'll also be here every day to figure it out. I embrace the challenge with these trades, and we try to figure it out. If I feel like I need to be conservative, I've got strategies for that. If it's time to be aggressive, I've got strategies for that. Time to generate income, sell premium, raise cash, I've got strategies for that. Okay. Yep, we'll see. We'll see. Yep. And again, all these dynamics can shift, right? Think about the consumerism. Our GDP is 70% consumption. Well, if you crush every consumer, well, maybe manufacturing fills that gap. I mean, there's all these models where we think about of like, this can't happen. All this stuff can change, right? Markets can change. Ratios can change. Correlations can change. We might not be a 70% consumer GDP nation. We might be a 60, 50% consumer nation. We might actually, maybe manufacturing steps up and picks up some slack. But then we run more of a cyclical economy because when we're manufacturing having ebbs and flows, we have more recessions, which makes things very volatile. The reason we've had very few recessions is because we don't have any manufacturing. It hasn't been a huge part of the economy. It's all tech. But if we onshore manufacturing, bring things back to the US, we're going to have cyclical recessions. So, I just think it's going to be a wild ride. These next 3, 4, 5 years is all this stuff is like new and optimistic now, but then there's like realities and probably dark realizations, and things get dark fast. If you don't, if you don't believe that, look what happened during COVID. The first month of COVID, everyone is like, okay, man, we'll get through this together. And then within a month, we're arguing on who has to wear masks and who's going to get vaccinated. And that might make you all uncomfortable hearing that right now because that's how sensitive it was at that time. Like, we are a country that doesn't like to get along that well, at least the optics of that. But if you go talk to people in real life, you go outside and actually meet people, talk to them in real life, people are fine. It's crazy how the news portrays like we're so divided, we just want to fight and kill each other and destroy each other. Reality is like, it's not that bad. Most people are nice. Most people still acknowledge a golden rule, but it's a lot different through a social media lens. So I don't know. Ray Dalio, if you know who he is, he's been on this, this big tour about like the changing world order. I get it. It caught my attention a couple of years ago. Now I think he's clearly selling a book. He's, retired Bridgewater executive, hedge fund manager, one of the best hedge funds in the world. But he also says just save more than you spend and be nice to each other. Like that's a great like motto to live by. But I think it's like when he is just touting how bad things are and how bad things are and how bad things are and how bad. I get it. Like I get there's a warning, but what is Ray Dalio doing to position for it? He's probably still invested in the markets, So to make everyone so fearful that you got to run and go to cash and do nothing or stay out of the market, I don't think that's the right play. It's still something you can make a lot of money with. And I will say this for every crash we've had in the economy, every crash we've had in the markets, if you have cash or liquidity to go bottom picking or catch the indexes at some big correction points, you can make a ridiculous amount of money. I mean, I've been doing this for 20 plus years. I didn't know how to catch a bottom in 2000, 2001 when I started trading because I was brand new. I didn't know how to trade, 2008, 2009 when it was all happening in my stock portfolio because it was just passive investing. But after 2008, 2009, you know, my focus was, okay, man, I'm a full-time currency trader right now. I'm managing some money in currencies. I'm running a fund, working with professionals. There's protection that needs to happen. You can't let the market go down 50% and watch stocks go bankrupt and think like everything's going to be fine. It's like, you've got to have protection. So that's 15 years of, two really crazy examples of learning how to survive. And now I rarely trade without having some downside protection just to be safe. Okay. No, I agree. Catherine says manufacturing jobs will be, I know. And this whole idea of onshoring manufacturing, I knew that's not bringing jobs back to the US. That's bringing manufacturing back to the US. That's not jobs. So anyway, all right. I have to go. Deanna, are we good? If not, it's no big deal. I can cut the session off here. Let me know. But so look, I'm going to wrap up for today. I've got some pending orders. I'm going to be jumping on the road here in just a few minutes. So if I get a trade filled, I have pending orders right now. Here's working orders for my SPX. Okay. So pending orders, bear call spread, bear call spread. My iron condor is not filled. We were trading up to like 85 cents. It's down to 60. I'm just not flirting with the levels. So I'm going to let it do its thing. If it gets filled, great. If it doesn't, that's fine too. But conservative today, and then the broken wing butterfly for today. And then I did another broken wing for November 10th. So some pending orders for the day. We've had a good week. Winners 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 winners on the week. Did some rolls, doing what I need to do. Okay. Stream. Okay, good. So here we go. Let's do this. We're going to do a daily profit play stream, a little session that Nate and I did not too long ago. So you can stick around and check that out. If I've got anybody that's watching these daily profit playing sessions, that's here enjoying the content, great. Daily profit play, we do it every day. Waterfall income, we do it every Monday, every week. Newsbreakers, we're kind of through the bulk of what I wanted to trade. We have a lot of pending orders that have been filled. We got some winners this week, double ups. I just taught it this week. We had a great masterclass. We had some good profits this week on 3 winners. Pinch point, I've got a video to post this week for our current positions on pinch point. Crash insurance, latest trade we took was a VIX play out to April of next year. Project Options Edge, I got a video to post on our current positions. Today at 2 p.m. Eastern time, I'm running a free workshop on my practical options course. It's free. If you want to add this to your arsenal, it's just foundational education. It's prerequisite education. You want to learn some options. I'm anybody that's asked me, Chris, I hear you talk about options. I want to learn how to trade them. It's $27 for the quick guide. Okay. If you want the full course, you can either buy it. It's $497 to buy it. Or if you want to get into any of my classes, okay. Project Options Edge, Pinch Point, Double Up, Newsbreakers, Waterfall, Daily Profit Play. If you upgrade to a lifetime of any of these courses, I will give you the full course for free, included. So a $500 course that I usually sell on demand is included with a lifetime upgrade to any of my courses. So if you are in a standard daily profit play, you want to upgrade to lifetime, there's a $500 bonus course. Waterfall income, you want to upgrade to lifetime, there's a bonus course. But I'll talk about that today in the 2 p.m. workshop. All right. Thanks. Stick around for the daily profit play stream. and I'll see everyone later.